everyone, Trish again here. I just thought today we'd have a little a bit of a difference, and I've got Kerry Sainsbury along as a business development manager from Credit Fix Solutions and Credit Fix Lawyers. So why Kerry and I are wanting to have this chat is to share some information with you in regard to credit reporting during COVID and during normal times as to how that can affect your lending ability, the rates that you get, or the actual decision of being able to borrow at all. So so Kerry, a little bit about that.
Yeah, so I guess there is, what frustrates me, with this is there's no education that goes through to TAFEs or unis or schools that help us in terms of the finance world. We all seem to have to make the mistakes first, and then we realise what we should or shouldn't have done. So our business really tries to educate brokers, I guess, and in turn, obviously, the brokers like yourself, Trish, will then educate referral partners and customers in terms of how to protect your credit score, what's a bad credit score, what to do before you come to finance to assist. So I guess if you think about it, we only have about 600 points for every 5 years, because we need a sort of 550, 600 credit score to sort of get a good
and what's that total? It's a total of about 1,200, isn't it?
Yes, it's a total of 1,200, but realistically, for finance, most lenders will require about between a 5 to a 600, I believe.
Okay.
And you're the expert on that, obviously. So really, we only have around 600 points every 5 years to play on. Now, inquiries like Afterpay, Zip Pay, Payday lenders is actually 150 points on each inquiry. Would you believe?
Ouch.
Yeah. So that can really, like, if you do a few inquiries, there's your credit score gone. So we really have to protect our credit score.
And I know that some of the funders with that, they say that if you've just had too many inquiries for getting the credit score, but you've had, let's say, it might be anything, but say 3 within a 6-month period, they won't look at you anyway. That's an auto decline.
Yeah. So too many inquiries. Things like, how we used to what's it called, a credit card balance transfer every 6 months. Every time you balance transfer, that's another hit. That's another inquiry on your credit score. Things like that. You've really got to be careful of protecting. Too many inquiries.
So there can be nothing wrong with your credit in regard to you've never skipped or defaulted. There's no payment default. You've been tickety-boo all the way, and you can still get declined. And I think that's a big trap, particularly for first-time owners. To get that correct beforehand.
And now we've got comprehensive credit reporting that's come in March 2014. That came in, but the main changes that are happening this year. So that is every liability now that you have will be listed on your credit report for the last 24 months. So the repayment history for the last 24 months will be shown in your credit report. Now that can be advantageous as well. I know that, we panic and go, oh no, what's going on? Everything's going to be shown, we can't hide. But if you actually do pay everything on time, it actually boosts your credit score as well. Not sure if you knew that one, Trish.
No.
There you go. So it can boost it. So where we had the negative, and you'll see it when you do credit reports now, there's a credit score and there's a negative data credit score. And that's the difference between the old way of credit scoring and the new way. So sometimes they can be 200 points more than the actual negative data score, because the positive reporting, the repayment history has come into play, and it shows that they're paying everything on time. So it actually boosts your credit score.
Okay, and that's a point I find with my clients. If they say, oh, I've got my credit report, but there's no credit scoring on there. And I think I was chatting to you last time, and that it was if you're getting the free version, it doesn't always have the green colouring and the numbers that we need.
Yeah,
so you're better off doing it either through ourselves, where we can do a background footprint, or the company like yourself, where you can do that for them. Is that right?
Yeah, exactly. There's a website. It's www.mycreditfile.com.au is the free one. But again, I don't think it shows the credit score. I think they would have to order a full report with Equifax, or you may have resources through your aggregator or mortgage industry body as well to get the full access as well. You can tell. I mean, you can tell by your inquiries, or if you've got defaults as well, you'll get a feel if you're going to have a low or a high high credit score. There's also 3 credit reporting bodies as well. So there's not just Equifax that the lender or whoever's putting the default on your credit report can choose from. So there's Equifax, there's also Illion, and there's also Experian. Now, a lot of the lenders are starting to use 1 or 2 or 3 of those credit reporting checks as well. So if we do have a default, for example, on Equifax, we're probably best to do a check on Illion and Experian as well, just to make sure we're clear everywhere. Otherwise, it might be another lender decline where they find that default and it's actually affected your credit score and wasted everyone's time as well.
Yes, and undisclosed debts. It's another reason to get the credit report beforehand and understand it. Is that you might have showed us that we've had 3 credit cards with statements, we've included it all in everything, but you've forgotten that there's a credit card that you haven't used in the last 2 years. It's still open and active. That can be enough for a decliner with some lenders.
Yes, correct, undisclosed debt. So there's no surprises now. Basically, everything is on our credit report. Every liability that's open, and if they're closed, it'll show as well when they're closed the last 24 months. So it can be very handy as well.
Oh, that's good. And so how long, if you've had a credit card 5 years ago, how long does that stay on there? You might have closed it 5 years ago. Does it disappear or is it always on there?
It shows for the last 24 months, the credit card. If there was an inquiry, that inquiry would last 5 years.
5 years.
But the repayment history was down there for 24 months, but the inquiry 5 years.
Okay, all right, so that's good. Okay, so in which case that it's now doing that positive credit reporting. It can still appear negative, but it's positive credit reporting.
Yes.
And there's symbols that come up on there for the 24 months in regard to that, isn't it? As to each month, there's a symbol to say whether they paid it or whether they've
So you can go. I think it's 1 till 6. So 1 is 0 to 29, 2 is 30 to 60, and it's every 30 days from there. Just remember, if you are in financial hardship, or if if there are some problems, there is a 15-day grace period. So you do actually have 15 days to pay that. If you know you're going to be over the 15 days, make sure you ring your lender, your provider, your credit provider, and report this. Go into a payment plan, report hardship, because if you go into hardship, it won't be actually marked as a late payment. It'll be marked with an R, which is the code is not reported. So that'll not actually affect the credit score. My only issue with that, and especially with COVID at the moment, and this is my personal opinion, is that say we've lost our job because of COVID and we report the hardship, the R is going to show for the next 6 months. So yes, it's not going to affect our credit score because we've done the right thing and reported it. However, it's going to be evident to the lender when it comes to finance the next 6 or 12 months that there has been a situation that's occurred. So admittedly, there's no reason to decline a deal because of an R. However, I believe that the lender may scrutinise this application a little bit more to investigate and ensure that the current, the applicant has got strength in that in the employment.
And that shouldn't scare anyone who is having to do that under COVID. That's their circumstances. They're making it's better than trying to sell a house during this time or just ignore it. It's best
definitely
to be in communication.
Definitely an option. If you do have maybe, not sure if there's equity or other ways, that's definitely other options. But yes, it won't affect your credit score. So it's definitely the right thing to do as opposed to leave it and not do anything.
Yeah, and we're sort of seeing that the lenders are they're trying to make sure they're still doing prudential lending, but they're trying to make sure that they're not victimizing people because they're under this, under this circumstances.
Exactly. Exactly. The R's might not be counted. I mean, the lenders might just change their policy. It's the unknown at the moment that we just need to be careful of.
No, they might discount that, but they'll probably want better confirmation around, no probation, how long you've been with that employer, and the longevity that you expect, that sort of thing.
There might be some more questions
change it up. Yeah. So forgetting COVID and under normal circumstances, the other part of what you do is if someone has had life events in the past and they've had hiccups and divorces and all sorts of things go on, and they've ended up with skips and judgments and things on their credit reference. I think been clear in explaining in the past that what you don't do is, if they're legitimate and they've been recorded legitimately, they stay on there. But you have an ability to be able to assist in clearing other ones up. Do you want to tell us about that?
Yeah, so 95% of these defaults, court actions and judgments we do successfully remove. So we do have a high success rate, which is good. And when we say legitimate, we're looking for errors. So how we work is not if the default is paid or unpaid. Morally, we also need to discuss that and sort that out. However, we're looking for errors and loopholes in the legislation, in the credit reporting legislation, in the Privacy Act 1988, that we're confirming that that lender who was defaulted actually missed the right process. Has some basically errors and loopholes in the legislation. We also look at compassionate grounds, like you said, so divorce, loss of job, sickness, and things like that. The lenders, unfortunately, are very quick to put on defaults, and 95% of the time they're put on in error, and they shouldn't have actually done so. So that's how we work. That's how we can remove them.
Yes, that can improve that can correct and improve the credit score, which then can enable you in the future to do lending at a much easier pace, I guess.
Well, that's the thing. So normally, if you, let's say you had a default on your credit report, you, Trish, would have to look at maybe an outside the square lender for that customer. In particular, that rate would be what, 5 to 7%. If we remove that default for them in error, there's no history, the credit score instantly lifts and they're back to a mainstream customer at 3%. So if you think about that rate, the interest rate saving, 3%, about 15 grand a year roughly that they're saving. So our fees are $1,500 for a default under 5K as well. So the saving definitely outweighs a higher rate.
And I guess that brings me back to the, what we were talking about today is options, that you've got the potential to be able to correct position and certainly to control the position in regard to your repayment history. So don't think all is lost. And if things get worse during this time, stay open in communication with your funder and, give myself a call or Kerry a call. Kerry's details we'll put on, or Kerry's business details and what have you, I'll put on my website from there. And if you need to know more information to be able to look after yourself and take control of your finances, let us know. Thanks very much, Kerry.
Thanks for having me today.
You're right.
Thank you.
Thanks. Bye.
Bye.